Welcome to the ARMR Report. This is the stock market wrap-up. I'm Brett Rosenthal, the creator of the ARMR Report, the founder of the ARMRReport.com. Now, the ARMRReport.com is a website designed for individuals managing their own capital. And I respect you for doing it, but you're welcome over time to discover that it's a monumental task. And so I created the ARMR Report to share information with you and to help you learn how to generate your own information designed around protecting capital and capturing upside, right? ARMR stands for Algorithmic Risk Management Research. So we start by managing risk, then we capture upside, and we do it with a three-step process, which I like to call the ARMR Investing Way. We build our whiteboard and we do fundamental research. I'll share that research with you. We use algorithms. And of course, you could do your own research, create your own information flow. Then, of course, we use algorithms to execute. When do we buy? When do we sell? That's proprietary information I'm sharing with you on this show. And of course, I share all day with ARMR subscribers, ARMR insiders, through our Slack trading desk and other live videos just like this designed for ARMR insiders. And then we focus on a stop-loss discipline. Now, I like to share my discipline with you. But over time, you want to create your own that fits your own risk profile and your own personality. The importance is to have a stop-loss discipline in place that you do not deviate from. Those three components are how the ARMR Report manages capital. And I think over time, it'll help you improve your own trading habits and your own investing habits. So, without further ado, this is the wrap-up. I'm going to get to stock market behavior, what I think is happening in the next couple of days, into OPEX. We're going to talk about our favorite investing theme, which is cannabis. And I'm going to round it out with a discussion of how short sellers write reports for the specific purpose of helping them cover their short when they're wrong. I'm going to give you a couple examples of this. How do I know this? I've been doing it over 30 years, and I've come across it, and I'm going to share with you a story from years ago that you will not believe. But it's 100% fact. I lived through it. And I'm going to show you a couple of examples right now. So let's dive in. First of all, don't forget, I don't know you. I can't possibly give you investment advice. I can't tell you how to buy or sell stocks, right? Because I don't know your risk tolerance, what your portfolio looks like. What I can do is share my own information that I use to manage my own personal assets in the hopes of sharing with you the ARMR Investing Way. Okay, that's what we're doing here tonight. If you enjoy this, give me a thumbs up. That always helps. You can subscribe to this YouTube channel or the ARMRReport.com right down below here in the description section. So let's start with the market. I like to go big picture first and then drill down a bit. Thoughts at the end of the day. Some stocks were coming down at the end of the day. And as I was chatting with ARMR insiders in the Slack room during the day, one of the questions was, as an example, we'll just say, whoops, not what I wanted to show you. As an example, I'm going to share with you here. Let's take a look at, I don't know, Pinterest. Okay, Pinterest sold off at the end of the day. And what I commented was, there is, on every stock going into OPEX, a sweet spot or a key location or a key gamma level. And it's totally normal to see a stock that's trading above that level settle back down to that level to clear the options expiration. Okay? Snap did the same thing. Is this the beginning of the end? Is this the beginning of some big sell-off? We don't know. But what I can tell you is options expiration is Friday. It's a big OPEX. A lot of exposure, a lot of gamma. Totally normal for the asset to come right back down to where the gamma level is. Okay? So that's what I was saying in the trading desk when I was saying I don't really take anything from one-day moves, particularly not right into OPEX. Some stocks are blowing through gamma. Others are coming back down to it. It's a lot of noise, and it doesn't mean much to me. Okay. The market itself looks, phenomenal. If we just look at the market averages, this is just a nice steady uptrend. And in a steady uptrend like that, if you're investing correctly, you're creating massive alpha, which we've been doing for the last 3 or 4 trading sessions. Okay. So I don't see a lot of, on a Wednesday leading into OPEX on Friday, all we've been getting is a lot of noise trading around gamma levels. And so it doesn't really mean much. And we'll see what we have really next week. Are we going to accelerate to the high of that Andrews fork and come up to here? If we do, if we rip higher like that in this market, we'll be looking on the ARMR report to book profits and begin building a cash position. Okay? Vice versa, it breaks back down, we'll get stopped out, but that's obvious. I mean, the 50-day moving average is our stop here, so we're going to get carried right on up until we break that. We don't know when that'll be. Okay? So those are my thoughts on the market. Not much to glean from it. Oh, you know what? Let's just take a quick peek at VIX, because that's kind of a leading indicator. If VIX can really break down, that would suggest the market is going to break to the top half of that Andrews fork. And it hasn't done that yet. You see, we've been trading, honestly, and look at that tight range that VIX has been in almost for over a month now. The high on that range is anywhere around $18, $19 to $16, right? That $3 range. So if we could break down below the lows here in a real breakdown move, which may occur after OPEX, that would suggest we'll get a higher move, okay, in the market towards the top of that channel. So that's what I'm looking for. So let's talk about what are we doing to hedge risk, if anything. Because the time to hedge risk is when no one thinks you need risk, need a hedge. Couple of ways to do it. First of all, you got overnight risk. How do you hedge that? Well, I'm using the volatility index. I'm doing it through the options market. Okay? ARMR Insiders, you can always pick up the phone, call me, and I can walk you through how I'm doing it personally. In fact, I had a conversation today with an insider about that very discussion. So I'm happy to have a one-on-one discussion about that. But for the sake of this conversation here, we're using options on volatility. That's a low-risk way to get coverage in case something horrific happens overnight. Okay? The other way to do it is to use puts on the indexes. I don't have that position on right now. I think the markets are going to roll higher. January, February, March is typically a good time of year for the market anyway. We're seeing massive run-ups in a lot of our positions. So it doesn't feel like I need to be that hedged yet. So I'm using VIX to hedge for some catastrophic event overnight. And then intraday, I'm looking to short the market. I use IWM and QQQ as my short opportunities. I don't recommend people do this, right? This is just how I protect my own capital. Most of the time when you have massive run-ups like this market's having, it's not an overnight collapse. What will happen is you'll get a gap up morning that reverses and implodes that begins an implosion. And so you'll have opportunities to put hedges out. So what I'm thinking of doing as the market, grinds higher, every time the market's gapping up in the morning, looking at that opening range low, looking at the volume weighted average price, putting out sell stops to protect capital, right? The other thing to do is to raise stops on your whole portfolio. As long as the market keeps running, let it run. Raise your stops. Then there'll be a day where you get tripped out. It's an ugly day. Look, there's no way to avoid an ugly day. It's going to happen. You can limit it as much as you can by these tactics I'm talking about, but you're going to lose some money off the top. If you're not willing to lose some money off the top, you can never capture the upside because you're always worried. And scared money doesn't make money. Okay? So I'm trying to put on some hedges just around the edges to protect myself, but I am way overweighted a bullish move here, and typically you get that in January. So anyway, the last thing I'm thinking about doing is on explosive moves higher in the market. So let's say we get a gap up run in the market. On those big up mornings, those are the days for me to put the puts on, right? And then when it reverses, comes down, I'm usually taking the puts off, booking a profit, waiting for the next gap up. Okay? That's kind of how I'm looking at it. So that's how I'm hedging. But I'm not hedging aggressively right now, for what it's worth. You know, you're best to turn off the TV. It's best to turn off Fox News and CNN and CNBC, because there's just going to be a constant wall of worry. Forget about that news. Forget about your ego being like, hey, I knew it. I heard this. You know, there's so many Monday morning quarterbacks, you know, Chicken Littles that call the top and call the top and call the top, and nobody remembers. And then one day the market goes down and they say, hey, I told you so. That's just ridiculous ego and a complete lie. You know, if they missed the entire upside, what difference does it make if they eventually got it right at the top? They just missed massive opportunity to make money. I stopped reading Zero Hedge years ago. You know? If you all know Zero Hedge. Oh, sure, they got a lot of great ideas on that website. Love the work that they do. Always keeping you out of the market. Always keeping you on the sidelines. Always keeping you afraid. They tap right into that fear, man. And that's what they sell. And it doesn't make anybody any money. But boy, are they loud when the market goes down. They tell you, we told you, we told you. Give me a break. Let's move on. The cannabis sector. We had a massive up day. Let's just give a quick cheer for the advisor shares, MSOS. They did a wonderful job putting together a product for all of us to get access to the U.S. cannabis market in a simple and easy to grasp way. Now, if you all remember, I did a video, more than one actually, I did a two-part video back here explaining why I was comfortable buying shares of MSOS and that it was going to be the cornerstone of our cannabis portfolio. That was back when the stock was in the 30s, high 20s, early 30s. Okay? So it's skyrocketed higher. It's got smart management. It gives us liquidity and access to all of the stocks we want to invest in. Congratulations to MSOS. They're gathering assets at a torrid pace. And the fun thing is for us, that just keeps feeding the beast. When these ETFs see a massive inflow of capital, they take that capital and they buy our favorite names. So we've got the hub and the spoke approach in ARMR portfolios. The hub, MSOS. The spokes are four favorite big, I was going to say big cap, not big cap, but four favorite big U.S. MSOs. Cresco, Curaleaf, Trulieve, and Green Thumb. Can I go out there and buy all of the smaller names, the Juicy, the Harvest? You could. I think there'll be consolidation in the space. I think they'll come after those names. Acreage looks great. But for my money, I want liquidity and ease of execution, and I want to cover all my bases. And the way to do that is MSOS. It's just a no-brainer. So let's go over what the ARMR strategy was. We had 50% of the total portfolio exposure that we wanted before the Georgia vote. So whatever our exposure that we wanted, let's say we wanted 20% of our portfolio in cannabis, we had 10% on before the vote. Let's say we wanted 50%. That meant we had 25% on before the vote, right? And what we said is the day after the vote, we're adding the position. We bumped it up 50%. So whatever you had, whatever we had, I'm not telling you what to do. This is what we did. This is how we execute. This is the ARMR investing way. We manage risk first. We didn't have to be over our skis, overly aggressive in front of the vote, risking tons of capital on a negative vote going against us. We didn't need that. 50% exposure. The hard part then is to execute the next piece. Because when it happened and it gapped up, your first reaction is, maybe we should sell the gap. Maybe we shouldn't add anymore. You have to come up with your investment strategy before the news comes out. You come out with your investment strategy when the news is turned off at night, when the market's not open. You have a clear head. If you have to, write down what your strategy is. Do it. Write it down. And then you execute with ruthless precision when the market's opened. You don't watch CNBC. You don't let someone talk you out of it. You don't talk yourself out of it. You've already thought it through. All you have to do is execute. You're a human algo during the trading session. Okay? So we added 50%. Whatever position we had on, we increased it 50% on this day. And we finished off the position adding the last piece, which was whatever we added on this day, we added again the same position size this day for our full complement of investment. Our stop is clearly the low of that gap day. The theory now is this gap up brought in a whole new set of investors. So the gap should hold. If the gap breaks, we'll cut our position dramatically. Okay? Do we own MJ? Absolutely. We did the same thing with MJ. Now you might say to me, why? What's the point? Just pile into MSOS. You can. There's nothing wrong with that. It's my belief that there is a massive amount of capital trying to get into a small space. And institutions aren't going to be discerning right now. At this stage, they're just putting capital to work. And the quickest, easiest, simplest thing for them to do is buy Canopy, buy Kronos, buy Village Farms. Those three companies have their tentacles in the U.S. Right? People can just buy MJ. This is an easy trade right here for me from a reward to risk standpoint. Very liquid. Okay? So, same scenario. Here's the low of the gap up day. Clearly, that gap should never be filled. If it gets filled, I'll have to exit positions. If not, we're going to see how far this run can take us. And of course, around those hubs are these spokes, right? We own our our Cresco down here. You can see the little entry arrow. That's where we put that position on. And we're just riding them, you know. Curaleaf, Green Thumb. It's too much fun, really. We've been working on it. It's like an overnight success, but let's be honest. We've been working on this investment theme for 3 years. I first got on YouTube to talk to you guys about investing in cannabis 3 years ago, right? And we had to avoid a bear market. And we did that because we don't force our will on the market, because we use stops. As painful as it was in May of 2019, we sold all of the stocks, right? And then we use algos to tell us when to put the trades back on. That's the ARMR investing way, and it's paying off right now, and God, it's fun. All right, so let me just wrap up real quick, and then I'll get to some questions. I wanted to talk to you about this. This is a position we had in the portfolio, Dropbox. We're out of the position today. Okay, we bought it here. Our stop is really a low of the day we bought it. We exited it a little bit higher. We actually exited right up here as it broke below the 25-day moving average. Okay? So let me tell you what happened, and I'm just going to share a little anecdote with you. So there's a short seller came out, wrote a short report talking about, reasons why the stock is going to go a lot lower. The company made an announcement today. The chief operating officer stepped down. They're going to cut their workforce 11%. Okay, I've been on the last conference call. The management team already told us they're going to be cutting the workforce. You know why? Because they're instituting a plan to have their workforce work from home all the time. It's driving margins higher. They don't need the office space. They're able to get rid of office space. All right, this is a company that's taking the shift during the pandemic and running with it and running their whole business like that. Slimming down, raising margins, great reason to own the stock. So they're cutting the workforce. I'm sorry for the people losing their job, but I don't care. As an investor, that's great. They're slimming down. This chief operating officer leaves. Okay, that doesn't mean a thing. Now, if you're a short seller and you're stuck in your position because the company is getting set up to be sold, which is my personal opinion, I think someone's going to take over Dropbox. And I think some hedge fund or somebody out there had a short position in Dropbox and wants to get out. Now, I don't know this for a fact. I could be totally wrong. But I've seen it happen over and over again, where a short rag will write a report. The stock will go down that day. If you look a month from now, because you can always see like a month later what the change was in short interest, right? You'll see a huge drop in the short interest a month from now. And it happens right around now. Oh, gee, I thought they were putting out a short report. You'll see a major collapse in the short interest, right? Then, of course, the company gets taken over, the stock goes up huge, but the short who was trapped is now out. Okay? When I first got into the business, this is the story real quick, I'll try to tighten up this conversation, but when I first got into the business, I was 1993. I bought shares. I graduated Boston University, got into the workforce, owned shares of a medical products company. And they had, it was a triple-digit revenue grower. All the William O'Neill stuff was there. The chart was great. It was breaking out of a cup and handle. The stock was running. And then a story comes out, Wall Street Journal. Blue Horseshoe hates this company. This company has fraudulent billings. That's what they wrote. This is before they had short reports, on the internet. 1993, nobody was on the internet. So what you did then was you paid off somebody at the Wall Street Journal, right? And they wrote a report for you, okay? And so stock got wrecked. And they quoted in the Wall Street Journal a particular individual in the government of New York City, okay, who had called out this company for fraudulent billing. The guy's name was there in the Wall Street Journal article. So I picked up the phone, found the guy's number, got him on the phone. I said to him, "Hey, I just read this story in Wall Street Journal. I just wanted to know what's fraudulent about their business practices." This guy screamed at me, and I mean that's not an exaggeration, screamed at me. And what I could understand from his screaming was, "I never said that. I don't know why anybody wrote that. I'm sick and tired of you people calling me. I don't even know what company you're talking about." And he slammed the phone in my face. Fast forward a month later. This company had a big short interest. A month later, short interest, almost nothing. Company announced earnings. It was another blowout. The stock went up 50%. Did I make any money on that? No. I got blown out on the short report in the Wall Street Journal. But I learned a valuable lesson. Okay? This stuff happens all the time. You don't believe me? Let's take a look. Ready? Here's something that happened recently. You guys remember this? Oh yeah, GrowGen. Right here, the company, there was a short report that came out. Now, in this case, they got my stock. They got my stock because what was in the short report was something that bothered me from my own research. All right. And I owned the stock at $3.50 and we sold it up around 18 and change. And so I made enough money on that trade. But do you guys remember the short report? This was the day it came out. What did the stock do? That was the bottom in the stock. And that was a very convincing short report. Remember, it was like 10 pages long of all of the things wrong with the management team. Remember that? Stocks only skyrocketed from there. Let's look at another example. You guys remember Nova Gold? Let's look at Nova Gold. Nova Gold had a big run up, had a big short position. Okay? Had a big short position. Stock exploded higher from 8 and change up to 12. Right? And then a short report came out. Oh, it's totally, what they're doing's totally, whatever, illegal. Right? And when we did the sleuthing, we discovered that the short report was written by somebody in China. But it wrecked the stock from 12 back to 8. The bottom in the stock. That was the bottom in the stock. Stock then went back to 12, and now, of course, it's just following the rest of the gold market. Okay? The short report was completely erroneous. But look at what happened to the short interest after the report. It collapses because the shorts cover. Don't hate the shorts, right? Don't hate the play or hate the game. That's just the way the game's set up. Now, does it mean I don't sell my Dropbox? No, I do. I don't know how far down they'll bang this thing, right? But it's on the top of my whiteboard. Okay? If this stock holds up and doesn't make new lows over the next couple of weeks and holds above the 50-day moving average, it gives me another risk-on buy signal, I am putting that trade right back on. Okay? So anyway, those are my thoughts for the day. It's a little story for you from, doing this for over 30 years. I got tiger scratches up and down my back, and I'm willing to share with you what I've discovered. I hope it's helpful. Do we force our will on the market? No. We have stops. We follow. We follow those rules. Doesn't matter what I think's happening. I don't know what's happening. Then we watch the behavior. We read and react. And then we execute. So if there's no further downside, and we see over the next couple of weeks the short interest go down dramatically, we know exactly what's happening, which will confirm that there's probably going to be a takeover. Somehow the short knows it, and this is what they do to get out of their position. Okay? This is a thought, this is just a guess. I don't know. I'm not telling you how to invest or how to trade. I'm just sharing my own adventures with you. Okay? I'll get to some Q&A now before we have to wrap up. What do you got for me? Butch, thank you for the MSOS YOLO picks. You're welcome, my friend. Glad you're making money on them. How do you think Apple, NET, and Fastly are going to step up? Okay, great. Let's take a look. So Apple, full disclosure, Apple is an ARMR a portfolio position, so we own it. We own it right in here. I love the setup. The stop is pretty obvious. A swing trading stop will be really a low of yesterday, and an investing stop would be a break below the 50-day moving average. Assuming those two things don't happen, this is the place to own the stock. Looks like a nice little cup and handle forming. And I think if the market breaks out and runs here in the month of January, it's not going to do it without Apple going above 140. So that's a smart position, I think. NET. Oh, geez. That looks good. I don't own it. Full disclosure, don't own it. Certainly a sexy looking entry point. The stop for a swing trader would be the low of today's action, and for an investor, it would be the 50-day. Fastly. Love that you asked me about Fastly because it's one of my favorite pet ideas. So Fastly, and I just saw the story today that the U.S. is going to allow investors to continue investing in Baidu and Alibaba and all these Chinese companies. I feel that we're a day away from an announcement about TikTok. You know, those of you who might remember, Fastly dropped down here because of the TikTok problem. 12% of their revenue was TikTok. Donald Trump, created all this dust up over China and TikTok and blah, blah, blah. And so, boom, it's out of the stock now. So what you have is a great company with a booming core business that may end up getting revenue from TikTok. Meanwhile, Wall Street thinks they're getting no revenue from TikTok because they came out in the last earnings call and they said, hey, we're taking TikTok completely out of our numbers. So if there's an easing, a thawing, if you will, of tensions between the U.S. and China, and that allows TikTok to continue to function and work with Fastly, then they're going to blow out the next earnings number. Okay, hang on a second. Gotta call you back. I gotta call you back, brother. All right. Okay. So I certainly like the setup. Full disclosure, we already own it in ARMR portfolios. Okay, and clearly the stop really is back here. For both swing and invest strategies, my stop would be right back here. I don't know, around 81.95 or thereabouts. Festeroso, GWRS. Oh, water under the bridge? Is that what you mean? I don't know what that is. GWRS. Oh, global water. I don't know it. I have to do some research on it. Okay. Gloria, True Leave at the top of a beautiful 4 up and out today. It is? I didn't even see that. Let's take a peek. I don't see that, Gloria. I mean, I love the glasses you're wearing, but I don't see the 4 up and out there. So you would have to, show me that on a chart somehow. All right, you're asking me, can I talk a bit about Dropbox? I've been long on it for 8 months. I like the company, but I just seen it out of favor. All right, so there you go. I talked about that. I guess I already answered that question. Tech Monkey, build in my YOLO and hub. Thanks, Brad. Excellent, Deb. Glad you're. But just let me be clear, everybody. So let me be clear here. We are already in those positions. We are not buying today. There was no buying on the ARMR report today. Let's be honest. Those 3 portfolios we have designed for ARMR insiders to see what we're doing, those portfolios are a reflection of my own personal capital. I divide my capital into 3 segments: index only, swing, and investing strategies. Okay? So all of that money was committed before today's explosion higher. I'm not chasing a thing. So please be careful. The plan was to have a position before the election. When the election went blue, add to that position. Wait for a couple days to see if the gap is going to close. When it doesn't, finish your position off. Then on days like today, we're just enjoying the success. Okay? Don't let greed take over and make the position so big you can't handle the inevitable swings. There'll be days when the whole group is down. People just take a break. Okay? If I'm going to be adding any more to these names, I have to add on weakness. I don't want to add on strength. All right? Just be clear. Oh, yeah. Shoot. Thanks for asking me again, Joe. I forgot to do work on that. SSPK. Oh, shoot. Boy, it was up big today. Well, keep asking me, Joe, to make sure I get at it, because I do like the weed maps idea, and I do have to do some research on that, and I didn't do it. Sorry about that. That's a great idea. It could be a great idea, and I certainly like the chart pattern. So, Silver Spike. It's such an odd name for weed maps. I guess that's why I forget about it. SSPK. Blank check company form. And you're telling me they're buying weed maps. I mean, I have to do some work on it. Oh, geez, 3D printing. You know, I meant to get it. I meant to go take a peek at why is that going berserk. They had a huge run on 3D printing, right? And then, so we have time to do some research here. I'm not buying them off that explosion. It's up, 3 times in 2 days. But do they make a pennant up here, and is it something to buy? Maybe. And of course, this is the Nano Dimensions is, a very interesting 3D printing company that's just gone ballistic. NVIDIA, full disclosure, we own it in ARMR portfolios. I like the tight pattern, and I'm looking for that thing to break out. The risk reward looks good to me. It hits the stop. There's not a lot of risk in it. I could put a nice stop in there that I respect and I'm comfortable with, and the upside could be enormous. Right? If it breaks out, the whole market runs. That's why, this is a good question. And my whole portfolio, can't just be my favorite high-profile, dynamic growth stocks. I try to spread it out. And so I got some NVIDIA, some, Apple money in there, which are really just big cap tech stocks, established growth names. And so on days where the disruptive growth takes a break, sometimes you'll see those bigger names move higher. And so it's like an allocation in the portfolio, and I like the name. Quail Hollow, thank you so much for giving me a shout out. I really appreciate it. Vertex, VRTX. Whoops. Take a leak. Let's take a look at Vertex. Well, I had that big, huge gap down there at a relative strength of 4, and that just kind of keeps me out of the stock right now. I can go back and look at the story again, but there's no reason I'd want to be part of that chart pattern. There's so many other ideas to buy. Oh, excellent, Deb. Glad to see that message you put up there that you're not chasing strength. That's great. All right, guys, listen, I had a wonderful time chatting with you tonight. I look forward to seeing you guys again, probably on Saturday at 11:30, our usual time slot. Okay, so I think we're going to do 3 days a week. We're going to do Monday, Wednesday, and then Saturday at 11:30. All right, guys, have a great night. I look forward to seeing all the ARMR Insiders 8:30 tomorrow morning for the morning meeting. Take care, guys. Have a good night.